Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, factor and core equity strategist at Invesco, for a weekly review on the Nasdaq 100. We'll also take a look at ISRG and Netflix earnings. Ryan, it's great to see you as always. And it's been somewhat of a choppy market here. How did the Nasdaq 100 perform over the past week?
Yeah, choppy is a good way to put it. Kind of a seesaw week. QQQM and QQQ they ended up when the dust settled up 0.98%. Underperformed the S&P 500, which is up 1.14%, and S&P 500 value, which was up 1.28%, excuse me, for the week. When we spoke on Wednesday last week, markets were largely lower. That was following the release of the CPI and Fed minutes. I think kind of driven by inflation numbers that maybe didn't improve as much as the market was hoping for. And then the Fed minutes discussing the recession in the back half of the year and pretty much setting the stage for another rate hike in May before the eventual pause. One day later, Thursday, we see markets roar back. Nasdaq 100 up nearly 2% after producer prices came in largely lower than anticipated. The month-over-month figures for both the headline and core looked much better than expectations. Year-over-year numbers for the headline was better than expected, pretty much in line for the core. But kind of after Thursday, market was sort of searching with direction with no significant movement one way or the other. And throughout all of it, we've seen volatility gauges like the VIX on the S&P 500 or VXN or VolQ dipping to the lowest levels that we've seen in over a year. Today, we've seen much of the same kind of markets like seesawing around flat with the release of the beige book about an hour ago. Didn't really say much. Overall economic activity was little changed over in recent weeks. It mentioned tightening lending standards, but basically as a function of bank uncertainty. Consumer spending flat to down slightly. Wages elevated, but some moderation and some loosening in the labor market. So, kind of like status quo, nothing really that would be considered a catalyst to push the market one way or the other. So, kind of sitting tight until the next Fed meeting in the next 2 weeks, and as earnings start to trickle out here over the next couple of weeks as well.
Yeah, it always makes me pause, and not that it makes you a little bit nervous, but when you have such range-bound markets like we see now in the VIX at the levels that it's at, it really definitely is a head scratcher, and it makes you wonder, are we seeing too much complacency in the market? Let's take a look, though, Ryan, at the sectors that were leading the way.
Yeah, so sectors, kind of the lack of banks and financials exposure was the biggest drag on relative performance against the S&P 500. I think earnings looked pretty positive in the space, and then when you look at positive contributors, healthcare was the biggest relative contributor to QQQ performance against SPY. Even though the sector is underweight, we saw some outperformance within the names held in QQQ again versus S&P 500.
All right, and let's take a look at two stocks in particular, Intuitive Surgical and, of course, Netflix. And I'm wondering if this is going to be the narrative of the earnings tape when you see just how stocks are rewarded.
Yes, and I think that's absolutely right. We saw it last quarter. Like, you need to have pretty solid guidance, and you'll be rewarded. Netflix has been a little bit of a wild ride over the past 12 hours. So the company was down over 12% in the aftermarket yesterday after reporting a very slight EPS beat and revenues that slightly missed for Q1. But I think the sell-off was fueled by Netflix only adding 1.75 million subscribers in Q1. That missed estimates of 2.4 million. Beyond that, Q2 EPS and sales guidance missed. I think looking forward, the company predicted kind of these new initiatives like a cracking down on password sharing and that new the new service that's ad enabled that will allow growth to kind of pick up here as we look beyond Q2, and then ultimately saying that they should meet their financial obligations. Talked about better than expected free cash flow for the year, and kind of teasing accelerating share repurchases for the year. Since then it's sort of rebounded in the aftermarket. Now it's trading lower by 4.5%. If you look at Intuitive Surgical, however, it represents about a half percentage point overweight in Nasdaq 100 versus the S&P 500. It's a medical device company that's built on robotic surgery. Shares are ripping today over up over 11.5%, and that's after reporting Q1 sales and EPS that beat analysts' expectation. And also it's procedure growth for the first quarter that beat analysts' expectations. So, we saw kind of a slew of positive analyst commentary on the back of that, and I think it's really setting the stage for kind of improvement in surgeries, which are still kind of, still kind of hurting from the COVID hangover, so to speak. So kind of bodes well for future surgery growth as we continue to limp towards normalcy here. And then tonight we have earnings expected from Tesla. We've seen Tesla shares falling today, earlier today, after they cut prices on 2 of their models, kind of raising some new concerns again around demand of Tesla automobiles, and that news has kind of weighed on other EV makers across Nasdaq 100. The Lucid Group and Rivian. Rivian suffered a downgrade and price target cut today on a lack of catalyst. So, despite like huge macro catalysts a lack of macro catalysts over the past week, I think as we start to see earnings come out, we'll get a better view of just how these companies are viewing economic activity for this coming quarter, and certainly for the back half of the year.
And Ryan, a little bit of nostalgia for you. Netflix retiring after 25 years, its red envelope for DVD shipping. I'm sure a number of subscribers out there didn't even realize that they still had DVD shipping. All right, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.